So I think the first thing that you got to do is when you're looking at an investment, and this isn't just me saying this. This is like, I think, how professional investors and money managers operate.
Yep.
Okay. The first thing that, like how Warren Buffett would operate. Okay.
Yeah, exactly.
Like, okay, the first thing I'm going to look at is the first P is the people.
Yep.
Right. So this would be no different. Like if I'm going to go buy a vet practice, or if I'm going to go buy a dental practice, or whatever it would be. And
yeah,
I'm
looking
looking
at the staff.
I'm looking at the staff. I'm looking at the people involved in this investment. Okay. And, if you have a culture that's terrible, where there's a bunch of infighting, number one, the numbers are probably going to reflect that. But if you're going to deal with especially if you're trying to do like a private investment, man, I'm looking at that person. Who are the people doing it?
What's their history?
How
many, if they're doing an apartment complex, or if they're doing a gold refinery, how many gold refineries has this person actually successfully opened, sold, and, what's their track record?
Yeah. That would certainly be part of it, but just
also another one real quick. I don't mean to cut you off. Another thing, and I can't remember the exact example. This was probably a year ago, but there was a private deal that all the money got taken out of the country.
Really?
And it came out after the fact that the head guy in the deal had some sort of embezzlement or some sort of financial conviction in his background.
Yeah.
And no one knew because no one actually looked into him.
Yeah. Well, how about a background check on the person?
Yeah.
Yeah,
he was a convicted felon. I mean,
how about a simple background check on the person?
Yep.
And just making sure that the person is a person of actual goodwill, that they're competent, that they're not just good salespeople.
Yeah.
But and look, not everyone's perfect. Not everyone's going to be a saint, but look, you still have to do that, that due diligence on the people.
Yeah. Investing in someone or with somebody who has an embezzlement background or a fraud background is a glaring red flag. It's not like they got a DUI 24 years ago when they were in college and, have been an upstanding citizen since.
Yes.
Big difference between the two.
Yes. So that to me is going to be, I think pretty important is you got to know who the people are involved in the project.
Yep.
Okay. Second is going to be their philosophy. Like the second P is going to be their philosophy.
Okay.
Like I think if you're going into an investment, I got to know the story behind it.
Yep.
What's the philosophy? Like, if you're gonna invest in an ETF or a mutual fund with someone, don't you want to know what their investment philosophy is?
Yeah, in every fund, whether it's a private or a publicly traded fund, they should have a philosophy. All the publicly traded ones do. They basically have guardrails built in, and you can easily find this information on like Morningstar or Yahoo Finance, but there's guardrails built in as far as like, okay, maximum equity exposure is this, and it's the information's there if you look for it.
Yeah. It's right. Like what's our philosophy? Well, we believe markets are efficient and that, over a long-term period, if you are fully invested, you're going to be able to garner an 8 to 10% return. You may not agree with that, but that's a philosophy. Okay. Yep. Another philosophy would be we feel like we can take advantages of certain segments of the markets based upon this story. Okay. You may not like that, but it's a philosophy.